I've made a pretty significant change in my holding. Let's go over it. Let's have a little bit of a look into the portfolio, see how we're getting on, and actually cover, because I don't think we do this enough, why I am doing any of this. What's the point in investing? So perhaps you have your own story, your own journey, but I'm going to share mine in terms of what it is I'm trying to do. So I hold the bulk of my investments on trading 2 and 2. It's my stocks and shares ISA. I, of course, use a stocks and shares ISA because I don't pay any tax on any of the gains, any of the dividends, and I never will. So long as the rules stay as they are. We've got a budget coming up on November 26th, and Christ knows what they're going to do there. But I feel like stocks and shares ISAs, the language that Rachel Reeves is using, I feel like they're not necessarily going to get as impacted as other stuff. She may still go after cash ISAs. Time will tell. We'll cover that when we get to it. So trading 2 and 2 is where I hold my portfolio. I've now got £137,000 in there. We're slightly down on the day, 0.3%. But obviously, once you get above six figures, any changes in your portfolio make a big difference. So that's a £550 drop. Over the week, however, we're slightly up, 0.2% up. And then from there, everything gets green and rosy. So over the month, up 1.3%. Over 3 months, up 8%. That represents 10K. And over a year, up nearly 19%, which is 20K. And the max, of course, is 65%, which is nearly 30K. Now, you might wonder, people always ask this, 65% up on £137,000 portfolio doesn't represent £30,000. How does that work? Well, I didn't put all of the £137,000 in one go, or the £80,000, and then get an immediate 65% increase on it. So it is cumulative. It is the addition of all of the gains over the course of the years that I've been doing this. And in reality, it still doesn't even paint a proper picture, because I'm up much more than that because of consolidated ISAs. I've pretty much doubled my money, I suppose, over the course of the last 5 years. And you'll also notice something at the top here, right? And for the next 30 days, you need to keep an eye on this yourself. Get free shares. So for the next 30 days, if you've got a trading 2 and 2 portfolio already, you will have this come up at the top of your screen, get free shares. And this now means that people are able to get free shares for themselves and for their mates. So all you need to do is invite friends there, as it says. You get up to 5, so you can get up to 5 free shares for you and your mates. Send it to them. They'll get one. You'll get one. If you max out all 5, you get a few extra quid in your portfolio. Can't be bad. Now, that they obviously only run that on a periodic basis for people that aren't creators. When that runs out, you won't have access to it. And if you haven't still opened an account, of course, if you use the link in my bio or promo code Neil, you'll get a free fractional share yourself. It's typically worth up to somewhere like 100 quid, but it's usually, if we're honest, it's around 10 to 15 quid, but it's still a free little incentive. So let's go over the portfolio then. So biggest holding that I have, or always has and always will be, my All World. I have got £68,000 in there. I'm £8,000 up and 13% increase. Now that I've had for maybe 18 months, 2 years now. I changed it from a Vanguard one because the Invesco one is cheaper. The one that I use then is ticker symbol FTWG. Ticker symbol basically means the code. You can type that into the search box at the bottom and it will bring up that. There are 2 Invesco All Worlds. FTWG is the dividend paying, so I get dividends from that on a quarterly basis just because I like them. That's all it is. Accumulation ones are probably going to be better for people that want to be in their wealth building phase, because it's admin free. It grows in its own right. You don't need to worry about the dividends. It just does it automatically. So my Invesco All World is a significant proportion of my portfolio, and it will be when I retire as well. So people ask this too. Will I move more to bonds when I retire? And that's often what the sensible direction is that people take, because it is safer, right? Bonds, they're not as volatile as the stock market. Now, the risk is, for me, I'm not going to do that. And I could have something called sequencing risk. That's a hard word to say, which means that by the time I do come retire, if the market goes down by 20-30%, which it could do, that's going to take a massive hit in my portfolio. And it may mean that I need to work an extra year or two. In order to mitigate against that risk, the best thing to do is to have a cash buffer on the side, which I'm going to start to build up as I get closer to that time. So if you have a cash buffer on the side for a year, I know that's a lot. That then means if the market goes down by 30% in the year that you look to retire, you just use your cash, and you can hopefully wait for that market to return again to where it was, and then you can start taking out of it. Alternatively, as I said, you can look at bonds if that's your cup of tea. It's not for me. I suppose that makes me higher risk, but it's a risk I'm comfortable with. It might not be one that you are, so make sure you do what's right for your circumstances. The next one I have is the S&P 500. Again, distribution. Just love those bloody dividends. 30% up. I did change that a couple of years ago as well, but it just showcases the growth of the S&P 500 over the course of the last couple of years versus the old world. Now, the old world does make up 65% of the S&P 500, but it has just done really well. So if we look at it over the last day, it is down, as we said. But let's just go to a year out. It's up 16% in a year. That's really good return. So the average you can expect, of course, is 9 to 11% historically. Not you can expect. Have to be careful with my words there. No guarantee it's going to do that going forward, but 16% up over the course of the year, despite that April drop, which was pretty significant. Right, the max view on this one, we're up 270%. So the S&P 500, some people just go for that, and it has done well for decades, but who's to say that the US will continue at the same rate it has done? I don't know. And the reason that I have my all world is because I don't know. Now, if another country comes into becoming a superpower, I'm covered. I've still got US iShares NASDAQ US Biotech. Smaller holding into there. It represents about 3% of my position. Now, that is invested into predominantly US pharma companies. I still do believe in that in the long term, which is why I've continued to hold it. I do think that going forward, the advances that we're seeing within medicine and healthcare is going to be significant. People are living longer. There's a lot of investment in these companies. They are growing significantly. I'm comfortable to have a smaller position in that. So Microsoft is up 60%, continues to smash AI, Azure, cloud systems. It's just doing all the right sort of stuff. I've only got a smaller position in that. You'll notice again as well, all of my individual businesses are smaller positions. Ideally, I do still want to increase my all world percent, because that's £70,000 of a £140,000 portfolio. It's only 50%. Now, mixed with the S&P 500, it does make up a bit more, 70% maybe, 80%. But we do need, well, I need to really focus more on my Invesco all world. Realty income's always in the bloody red. We won't go over that. Monthly paying dividend, of course. Legal in general, it's typically in or around the red, but it does deliver a 9% dividend. Is that what we're at the moment? Sometimes the information on here isn't completely accurate. It's coming in at 9.15% dividend. Lloyds Bank has been staying at around 60% up. Aviva 40% up. Biannual dividend payer. Now look at Alphabet. They recently won a court case and the stock spiked as a result of that. 92% up in Alphabet. Now, I have held that for a number of years. I did trim the position maybe a year ago to bank some gains. What I typically do is if I have an individual business that absolutely flies, I'll trim it and I'll put that money into the old world. It means that I'm just increasing my gains by 1-2% here or there, and that really does compound in its own right. Unilever's doing well, 16.5%. Apple has started to recover a little bit. It has had a bit of a troublesome year, just hasn't really got back to its rate of returns that it has historically done. There is a new launch coming out next week of a new iPhone. We'll see how that goes, if it's going to have any impact on the stock. This is where we've got a change. So you will notice there, Invesco, EQQ, NASDAQ. I've incorporated the NASDAQ 100 into my portfolio. And in order to do that, I sold out of Johnson & Johnson. I just had enough of it. But I do still think that Johnson & Johnson will continue to grow. It's a stable, strong business with a healthy dividend. But I wanted to take a little bit more risk. And I didn't want to necessarily go into some individual businesses with this amount of capital. It's only 1,800 quid. I wanted to get into the NASDAQ 100. So the NASDAQ 100 is 100 of the biggest tech companies in the US. And historically, on average, the NASDAQ has done around 18% per year, which obviously blows the S&P 500 out of the water. Now, the caveat with that, the payoff with that, is the fact that some years, when it does crash, it crashes significantly more than the S&P 500. So you have to have the temperament to be able to deal with that. So if you're comfortable to be able to deal with the fact that your holding will go down a lot more than others when the market goes down, but equally, hopefully going forward, well, it historically has gone up a lot more when the market has gone up. It is concentrated into US tech, so you do have to believe in US tech going forward. Because it's a smaller proportion of my holding, I'm comfortable to take that risk. And I do think that US tech will continue to grow at a faster rate than my old world. So for me, that means that it's sensible to have a proportion of my investment into the NASDAQ 100. Pepsi's still struggling. That's another one on the list. We'll keep an eye on that. And Virgin Galactic down 90%. Let's quickly go over the RoboPie. So I created a pie to track I asked ChatGPT to give me 5 holdings that will beat the S&P 500 over the course of the next 6 months. We're a couple of months into it, and these are the holdings that we've got at the moment. We've got Amazon, Meta, Microsoft, Nvidia, and Uber. I'm probably the only person in the world holding Nvidia in the red. But that's what ChatGPT says is going to beat the market. It is an experiment. I only have a little bit in it, 50 quid. And we are a couple of months in, and it is doing 13% up. So it is doing okay. And I do check in on ChatGPT on a regular basis to say these are still the holdings that you want. There is a pie associated with it. If we look at overview and go down here, there's 894 people copying it at the moment. And I've always said this. Be very careful. Don't put any money in here you don't want to lose. It's an experiment. We're just having to play around to see what the power of AI is. Right, so as I said, I'm at £137,000, ever slightly down on the day. And the reason I'm doing all of this is because I want to retire early. So I want to retire at 50 years old. I've wanted to do that for 5 years. I've wanted to do it for longer than that. I've always wanted to retire early. I've always wanted to spend more time doing the things I want to do. Now, when I do TikToks on this, I get a lot of questions saying, oh, you'll regret it. You'll get bored inside weeks, all of this sort of stuff. I won't, I promise. I've got loads of hobbies. I've got loads of plans. And what I eventually want to do is build up a portfolio that's big enough that allows me, 1, to quit my job, 2, then to sell this house. So my ambition is, my youngest has just started secondary school, and I want to create stability for him. I think that's massively important. So my youngest and my eldest are both in secondary school. So my youngest, having just started, means he's going to be there for 7 years. So I'm planning on staying in this house for 7 years. That just happens to align almost with becoming 50. So I'm 42 at the moment. Then at 18, when he's 18 and leaves that school, we will then sell this house and move into the countryside. What I want to then do is buy a couple of acres of land, an old country house, do it up, spend time on the land, get some animals. I have chickens at the moment, but I want a lot more. I want a massive veg patch. I have dreams of a snooker room. I have dreams of a football goal, all sorts of stuff. And that's the whole reason I'm doing this, and it's the whole reason I started it. And that hasn't changed. So over 5 years of investing, that goal has not changed. I am not deterred in any way from that being my dream. Now, the point here, what I'm trying to say is, what is it specifically that you want to do? Why are you investing? Some people just start investing for the sake of it, and it makes really no sense at all, because if you don't have a goal, it won't push you, and you probably won't achieve anything. So what specifically do you want to do? If you just want to retire early, that's a bit woolly in its own right, and that probably is weak within its foundations. And I worry that that might not be as successful as you might think it is. Just the idea of giving up work because you don't like working. What else are you going to do with your life? You need to have something that's going to fill that gap. Now, for a couple of reasons. 1, to keep you sane. 2, to stop you aging more than you need to. People say that as soon as you retire and you don't have any interests or hobbies or other projects, your health goes downhill. Now, just retiring for the sake of it, I've read loads of stories and articles of people that have actually regretted that and actually ended up quite depressed as a result of that, because you lose your community. Depending upon what job you have, you lose your sense of identity. I felt this myself when I got made redundant in April. I'd worked in packaging innovation and sustainability for 20 years. And then all of a sudden that got taken away from me, and it wasn't my choice. Now, it's worked out perfectly for me and I couldn't be happier at it. But I'm in a fortunate enough position to have this side hustle. But it gave me a sense of uncertainty. It gave me a sense of questioning my core beliefs, my core existence, what value it is I bring to the world. Being such a specialist in an area where not very many people do it at all, and people are regularly singing your praises because you know about stuff that really helps solve problems, and then boom, that's gone in an instant. Now, maybe it's a little bit easier when you retire because you're planning towards it. Maybe not. I don't know. I haven't gone through retirement yet. But when you get it taken away from you just like that, you do question everything around your existence as a human. So make sure whatever it is that you are trying to achieve has some tangible goals associated with it. You might want to retire early because you want to travel the world. You might want to set up your own business. You might have just be about to have grandkids and you want to retire and be the carer for them. You might want to buy an old car and do it up and spend hours doing that. Buy property, do that up and flip that, or whatever it is. Or in the first instance, yes, the freedom is spectacular. It is phenomenal, but there needs to be something more to it. Otherwise, you potentially are at risk of it really not being a success, and you working for years at something, achieving it, and then going, well, what now? So I don't know. Listen, that's just my thoughts on it. If you're watching at this point, you're probably someone that watches my content regularly, so I do apologize for my lack of regularity in terms of uploads. I keep saying I'm going to try and get better at it. I am going to try and get better at it. I have continued to just focus on TikTok because it's grown so well. I'm at 120 nearly 1,000 subscribers on there now, and that's going really well for me, and I'm really enjoying that. This longer form content is harder. What a couple of things I want to do is I want to get better at it, so it's more engaging for you guys, and I also want to get more consistent at it. So at least once every couple of weeks. Ideally, we'll want to try and get to once every week. Now, we always need to finish the way that we historically have. So it's time for the joke of the day. How do religious cats learn to clean some... Fucking delivery. How do religious cats learn to clean themselves? They go to Catholic school. Right, I'm never going to be the next Jimmy Carr, but there you go. Hope you enjoyed that one. Thanks for watching. Appreciate all of the views, all of the comments, all of the likes, all of that sort of good stuff. I'll see you again, hopefully, soon.